Good evening, good morning, good afternoon, wherever you may be. This is Sid from Elliott Wave Plus, and this is the October 19 of 2021 edition of our quarterly premium plan webinar, where we go over all of the different aspects associated with our flagship product, the premium plan. The premium plan includes all of our work here for subscribers, includes all the different levels of service all in one flagship product. The thing that really differentiates the premium plan here is automated trade signals on over 20 different tradable items, and those go out nightly. And additionally, nightly, we have screenshots of our proprietary sentiment conditions template, and we'll be going over all of that during the webinar today as well. Very quickly, I want you to be aware of our disclaimer. It's at our website, elliottwaveplus.com. You go there, scroll to the bottom of any page here, and there it is, Terms of Service Disclaimer. You click on that, and there it is. Please go there and read that in full. If I were to summarize it in one sentence, it would be: there's risk of loss in all trading. One additional aspect of the disclaimer that is particularly important to mention when we do talk about our automated trade signals is that past results are not necessarily indicative of future results. While we have the website up here, give you a little bit of a tour around the website before we get started looking at the Algo and the sentiment conditions screenshots you received. So just so you'll be aware, on our subscriptions, we have a daily trend plan. It's only $25 a month, and it includes trend template screenshots on a nightly basis on about 20 different items. The list is all right here. There's no Elliott Wave in that $25 a month plan, no Hurst Cycle analysis, no automated signals, no back testing, but there is a pretty nifty daily trend template on about 20 items. So if you don't have a sophisticated trading platform for a very cheap price, you get nightly information from us showing what the current trend is on almost all of the items that you might consider trading, as far as the popular futures contracts and ETFs. Then the next level up is EWP screenshots. It's $70 a month. That includes screenshots on a number of tradable items. Those screenshots are time frame screenshots. So weekly, daily, 240-minute on many of the S&P 500, Dow Jones Industrial Average, NASDAQ. There are quite a bit more items than what I actually promised to show. There's about 7 or 8 items here, but if you've been a screenshot subscriber before, you know that on Wednesdays we send out updates, probably 60 different screenshots, updated screenshots, and on weekends probably over 100, 120 different screenshots. That's 70 a month, and that $70 a month plan includes everything that's in the daily trend report. So you also have access to the nightly trend reports. Then the next level up is webinars. I hold a weekly webinar where I go over all of my Elliott Wave counts and associated Fibonacci price targets for many of the world's major stock markets, commodities, currencies, and bonds. I show exactly what I do. I don't hide a thing back. Show you how I integrate Hurst into the wave counts. show you a number of important indicators on the different items. That is on Sundays at 9 a.m. Central Time. It usually goes about 3 hours or so. And that level is $100 a month. And that also includes everything that I mentioned before, the the Wednesday and the Sunday screenshots, as well as the nightly trend reports or trend templates. And then finally, there's the premium plan. Premium plan includes everything I just mentioned, but it also has nightly screenshots it sends out and a summary report of those screenshots of automated trading signals based on a momentum algo that we created here at Elliott Wave Plus, and also included our sentiment screenshots on virtually everything that is covered, all 20 items that are covered inside the premium plan. So there's 4 different levels of service: $25 a month, $75 or $70 a month, $100 a month, and $200 a month. And as you move up the scale, everything including the lower price plans is included in each more expensive plan. There's also a lot of educational materials at our site. You go here to the resources, and we have videos and guides. We also have a blog. We also have a YouTube channel where we post things from time to time. But to be honest with you, you can see I had to send out 3 emails in order to really even set up tonight's session. I really don't do that much marketing. I spend 99.9% of my time doing analysis for my clients, preparing the materials for paying subscribers. And I should do a lot more in marketing. Like today is a little bit of a marketing deal, but I try not to waste people's time. If they're interested, great. And if they're not, they might have something different they want to do. Although I've got to wonder why they wouldn't be interested in my work, especially when you take it all the different information that we provide. So at the site, I'm under the subscriptions tab. There's a testimonials tab, a lot of testimonials. The most latest one right here. And then screenshots, that's the $70 a month plan and up, have access to this tab. And this tab has the Wednesday or the Sunday screenshots right there that we just did on Sunday, the Wednesday screenshots before, so on and so forth. So if we go to just under the screenshots tab and view the latest edition, this is the Sunday edition. And you want to look at what my wave count is, for instance, on the Dow Jones Industrial Average on a 240-minute chart, you can see it's bullish. And I really have been rather bullish on the stock market ever since Hurst decided that the long-awaited 18-month cycle trough must have already occurred. After that big low in March of 2020, you move forward from that low, and the next Hurst 18-month cycle trough would have been due in, let's see, April, May, June, July, around September. And so here we are, well past wherever it may have occurred. For instance, this might have been the 18-month cycle trough, but we've moved far enough past where that 18-month cycle trough is. Had to turn bullish at this point for more upside continuation, and the wave counts show that as well. For instance, let's see, on the S&P, for a period of time when I was waiting for the 18-month cycle trough on my wave counts, looking for some kind of downward movement into that 18-month cycle trough. We never really got it. And when enough time elapsed that the 18-month cycle trough was probably done, time for the main count to be more bullish, and it looks like what the stock market is trying to do is move in a standard non-overlapping 5-wave impulse up into some fairly high but very important long-term targets. In the S&P up to 5,400. The Dow chart, we get to the Dow Jones Industrial Average long-term chart here from this weekend. And hang on a second, get back to the list. Quarterly chart. There's three at this point, three different extremely large cycle Fibonacci targets in the Dow Jones Industrial Average, but somewhere between 41,000 and 43,600 in a cluster there. And I've been thinking that's where the market was going and should hit major resistance at that point. And the big question in my mind has been, how is it going to get there in 5 waves? When you look at the monthly chart, it became apparent that, and I'm talking about 5 waves up from March of 2020, that we're in very likely in a non-overlapping 5-wave impulse straight on up into that target zone. And Hurst thinks that that top is going to occur in most items next year. And so what I'm talking about there is the sort of things that I talk about in the weekly counts webinars. So I showed you the screenshots, and then under the webinars tab, here's the different weekly webinars we do. And you have access to the full recording of the basic recording of it here. But we also, just a couple hours after we post the straight up recording, Zoom recording, we put together a recording of it where you can, since it's a 3-hour webinar, you can jump straight to my coverage. For instance, if you're interested in mining stocks, that's at an hour and 29 minutes into the timeline. You can click on that and it jumps straight to the coverage of the mining. So it jumps straight to that. So you can use this on screen menu to jump to the items that you're most interested in. And that also is posted usually late Sunday afternoons here in the Midwestern US. And you can go full screen with that and watch it, so on and so forth. So that's under the webinars tab. Then under the nightly reports tab, we have the daily trend reports. This is what the $25 a month people can see. Here's tonight's daily trend reports, and you can see that what is provided, and all paying subscribers get to see these. Not only trend charts on 20 different items. For instance, here's the Australian dollar trend chart. You can see it's been in an uptrend since October 7. This is based on a trend template that we put together of our favorite indicators, some of our favorite indicators, that just give traders a good idea of what the trend direction is, which is very important. And USD CAD, Canadian currency pair, been in a downtrend since October 4. Crude oil been in an uptrend since September 2. So it's very quick and easy to look through all of those, and everybody gets those at all paying levels. And then the stuff that we're going to cover tonight, the premium plan nightly algo reports. Nightly algo reports, here's tonight's edition, shows screenshots on about 20 different items and a summary report. We're going to go directly to that summary report here. Going to enlarge it and talk about it. Maybe just a little larger. Okay. So there's every item, for instance, the YM contract of the Dow Jones Industrial Average. I give a quick synopsis of my current Elliott wave count. What's the price direction expected by Hurst Cycle analysis currently, what the last signal was, and what the sentiment conditions are on it. And if there's an action item, for instance, we'll go through here, look for our first action item, and it's going to be either red, green, or yellow. Yellow essentially is an action item, usually meaning to exit a current trade. So there was a buy signal on October 13. It changed the stop to trailing on October 18. And then tonight, our premium plan subscribers were informed that the algo was stopped out. In other words, it came back, but it was stopped out in profit. The price came back and hit the trailing stop, but it did it in profit. And now that algo has gone flat. Okay. Now, some items have sentiment data on them and some don't. For instance, the NASDAQ, the NQ contract, currently at an 82, the DSI, that stands for Daily Sentiment Index. And that means that 82% of all retail traders are currently bullish. That's a pretty high number. It's not quite high enough to be alarming, and it depends on where it's been, and we'll look at the charts to see a little more history on that. On the ES contract, on the S&P, the current daily sentiment reading tonight that just came out tonight, 79, so on and so forth. There's a lot more sentiment information to be gleaned when we get to those sentiment conditions, screenshots that subscribers get every night. On the energy sector, there was a buy signal on September 23. It changed the stop to trailing on the 30th, and it's still in the trade. It's still not exiting the trade. Financial sector, there was a buy signal on October 15, so on and so forth. Now, sometimes there's a signal, but the order doesn't fill, because some items backtest better after it gets a buy signal. For instance, if that signal candle was a really large candle, the algo looks for an X amount of pullback in order to get long. And if it doesn't get that pullback in the next day, then it just stays flat. I'll explain that in a second too. There was a buy signal that came through tonight on EEM. This is something I've been bullish on in my webinars for a little while. EEM looks like it has put in a major cycle trough and is rallying nicely, just as expected. And let's see if there's any other signals tonight, any other color codes. And no. And so there's always a color code if there's some sort of action item, a new buy signal, a sell signal, or a exit signal, that sort of thing. And then you get individual screenshots. Now let's look at the one of the commodities. Let's look at crude oil or gold. Let's look at gold sentiment. And the reason I'm showing gold, this screenshot for gold, a sentiment screenshot for gold, is because commodities, there's a very important member of the markets or trader in the markets called the commercials that are especially important in commodities. So commercials are basically the producers, like the miners, and so they're hedgers. And most of the time, commercials are sellers, because what they do, their business model is they dig gold out of the ground and they sell it. So usually they're sellers. You can see the difference between the large specs. They're trend followers. They're trend followers with large accounts, so large they have to report their positions. And the green line down here is the commercials. That's the producers. And you can see that the zero line. So the commercials are almost always below the zero line. They're selling all the time. That's part of their business model. When the commercials get up toward that zero line, that's bullish. That means the commercials really aren't very interested in hedging currently. They think that prices are about as low as As they're going to go, I'm going to show you another sentiment on silver to exemplify the same thing. And the reason I'm showing silver, hang on, that's trend. Now, what I'm going to do is I'm going to go to a live chart of silver and show you that. But anyway, I wanted to show you at the website before I get away from the website. Everything that you get as a premium plan subscriber, you get a daily screenshot of the signals. Like, let me get you a good signal that maybe everyone would be interested in here. We'll go to the S&P ES contract. And right now it's on a buy signal from October 14. That was a long signal candle. And so there was a little circle underneath it letting us know that that was an inordinately long signal candle and wait for a little bit of a pullback to get in. That pullback did occur and it got long, and that green box right there means that it's currently in profit. So it's been going up now for 3 days after that buy signal that occurred on October 14. And it shows you where the stop is currently. Now, some items have use a trailing stop, and other items don't use a trailing stop. But anyway, so that's the actual signal screenshot. Those have the words the letters AMA on them, and the sentiment screenshot shows you some of the sentiment information I've been showing, where the commercials are positioned, how the large specs are positioned, and very importantly, what's the daily sentiment index reading. And you can see retail traders are generally trend followers as well. They've been following this to the upside, getting longer, and currently 82% of traders are bullish on NASDAQ. Now, if that current 82 was coming, after some real high numbers up and above 90, then that might be worrisome that we're actually moving to the downside, but we're not moving to the downside, we're moving up. And so 82 isn't very worrisome yet. And once it gets up, if it continues to move up, and my Elliott wave roadmap thinks that it will, then once we get up into higher regions, like above 90, that's when it becomes a concern. You can see that the DSI hit a 92, 91, 90, 91. It stayed very high for a while. And in an uptrend, that can occur, where you get sentiment just stays extreme for quite a period of time. And notice at the point that you started to see some downward movement right here was when the commercials finally gave up and started shorting. Notice what the commercials are doing lately. They're this item is commercials as a percent of open interest, and they've been getting longer. Commercials as a percent of open interest is a faster acting sentiment indicator than your traditional 6-month look back on the COT report. So what the 6-month look back is how are the commercials positioned on this item in comparison with their least and most bullish positioning over the last 6 months. So you can see on that measure, they're kind of neutral, but the faster acting commercials as a percent of open interest is almost extreme. So it looks like the commercials are getting longer here. So is the retail, but they're not quite in extreme territory yet. So there's some more upside possible. So that is what things look like at the website on all the different reports and things. Don't forget about our videos and guides, where we teach like here's a beginner's guide to wave counting. Here's our last recording from 3 months ago about our premium plan. So we have these every 3 months, and I give away a lot of information about how we built our algo, how it's been performing, so on and so forth, how to navigate our website, how I combined Elliott wave and Hurst cycle analysis, Elliott wave 101, why use the wave principle. There's all early detection of trend changes using the MACD indicator, so on and so forth. Lots of educational material there. So let me go now to some live charts and show you some finer aspects of the live charts. And before we do that, I want to show you a spreadsheet that we're going to make available to downloadable, a downloadable Excel spreadsheet where you can actually sort it yourself. And so the way I've got this sorted right now is the percentage return on investment over 3 years. And what this means is based on our backtesting and optimization, had the current algo settings been identical to what they are right now over the last 3 years, this would have taken an account size that started with $16,465, and it would have packed $116,000 additional profit on top of that, and that's a return on investment of 706% over 3 years. Absolutely fantastic. What if you were, instead of trading one contract at a time, you're trading the new micro E-mini, one micro E-mini at a time? Well, everything would be the same. It's just that the initial account size required in order to not be margin called at any point during the 3-year period, $1,647. It would have brought in $11,628 worth of profit on that. Same identical return on investment. So these signals will work on either the full-size contract or the new micro E-minis. You can see that the NASDAQ also was excellent in its return on investment, and so is the US dollar index. The further you go down the line, the less interested you probably should be in using automated trade signals on those items. Why would some items provide such an excellent return on investment when others do not? And I think the answer there is that some items trend more smoothly than others. Some items are extremely noisy. They may trend, but they're very noisy and have long wicks as they trend along. I think copper over the last 3 years is a pretty good example of that, and that's why a copper isn't on this list, because I can't get the algo really to be able to trade copper with enough of a return on investment to even bother to put up here. Whereas others, I tell you, been doing this for several years now, the Dow Jones Industrial Average almost always wins. And because probably because these companies are so very large, they're less volatile, they're less noisy, and when they trend, and it's a smoother trend, and it's easier for an algo, a momentum algo, to deal with a smoother trending item. Why? Well, it doesn't get stopped out as much. So the way the market works is it trends, and then it consolidates, and then it trends, and then it consolidates. Sometimes it reverses and trends to the downside. Now, we're not seeing much of that in the Dow here. This chart is showing back pretty much to the beginning of 2021. Had a nice uptrend, a little sideways movement, an uptrend, and then another dip, and now we're heading back, it appears, toward new all-time highs. Matter of fact, within just an eyelash of new all-time highs. I think that was the all-time high right there on the Dow. that occurred back on August 16. And so when you're using an automated, an algo signal, you have to decide what you want out of when you're designing it. And what I wanted, my whole idea behind these signals was not to get the most winning percentage. It was to bring in the most profit. That was what I was looking for. What would bring the most profit? And so when you design an algo, let's say you want the highest winning percentage possible. Well, here's what you're going to have to do. You're going to have to take profit very quickly, and you're going to have to use a large stop. And so whenever you see advertisements for algos that have like a 90% winning percentage, something like that, they almost guaranteed will have a take profit level that is 1/3 the size of their stop, or possibly a worse ratio than that. And yeah, they might win 80% of the time, but when that stop does get hit, it can erase everything you made on the last 10 winners. So winning percentage does not equate to directly to success in profitability in an algo. What characteristics do eventually provide the biggest profits? Well, one is, and I already talked about it, you want an item that trends pretty smoothly without too much noise. And so we've given you, we give you this spreadsheet every quarter that tells you exactly which items those are. And then once you get to that item, you want to cut your losers short and let your winners run. And that's what the algo does. For instance, this buy signal right here, let me spread this out a little bit here. This buy signal that occurred right here basically said, okay, the adaptive moving average, the slope of the adaptive moving average is now moving up. We're on a positive crossover on the Walter Bressett indicator and its moving average. And so get long at the open of the falling candle. So it got long at the open of falling candle. The very first thing that happened is it went into loss. But then very quickly it went into, but the stop that's being used here, the initial fixed stop, was big enough to accommodate that drawdown. And then things started moving in the proper direction. And what the algo does is it waits to exit. So it only gets in long when it has agreement on the slope of the adaptive moving average and the crossover of this Walter Bressett, which is a triple smoothed RSI, and a moving average. And that moving average happens in this case to be a 10-day moving average, but we back test for what moving average is best to use here. And we also back test on 2 of the 3 settings of the adaptive moving average, the first and the second settings. The third one, we always leave at 30. That the adaptive moving average was invented by Perry Kaufman, by the way, and what I call the Walter Bressett, his triple smoothed RSI, was first suggested by Walter Bressett. So those 2 guys happen to be 2 of the biggest giants in automated trading ever. And so I'm using both of their indicators, and I wait till they both agree to get long. But if either one of them says get out, I get out. So I make it prove itself on getting long. But if there's the first sign of a loss of momentum, I'm out of there. And that's because I want to ring the register after I move to the upside. Or move in my direction. I want to ring it as soon as there's a scent of any kind of smell of a loss of momentum. So in this case, got long here. The stop was big enough here to withstand that drawdown. It stayed with it. And then when this block occurred right here, that's that Walter Bressert crossover from its moving average, it said, hey, get out. And so it got out at the open and the open of the following candle right here. And that was obviously a really great thing, because the very next thing happened is it took a major dip, at least for one day. So it locked that in, it rung the cash register, and there was a huge winner. How big was that winner? Well, it was, this is going to be pretty close, $3,655 on that one trade. And it was in the trade for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. So it made $3,655 using one YM contract and did it in 9 days. Well, an annual premium plan subscription is $2,000. So would have made $1,600 more in just 11 trading days, on that one trade than what the annual premium plan subscription was. And so these big green blocks, those are winners. The dark red blocks, those are losers. And as you go back in history, you'll see that the green blocks on average are far larger than the red blocks. Look at how well the Algo did on a short position from a signal came in October 19th of 2020, and it exited on November 3rd. So about a 2-week trade, and that was on the short side. And $7,400 profit on that one trade. And then the very next trade was an even larger winner, but this one was going along. $13,570 winner. And here, this is explains why, with only a 53% winning percentage on this algo, why it can bring in $116,000 worth of profit over 3 years with a starting account size of $16,500. And the reason is because it lets the winners roll until they lose momentum. So it has an open profit objective. That's the critical thing about this. And it doesn't care about winning percentages. It knows it's going to lose sometimes. It knows that about 2/3 of the time the market is consolidating. It's not trending. And it knows it's going to take some losers in there, but they're not going to be any bigger than the initial stop, which on this particular item, the initial stop for longs is $1,600. The initial stop size for, and this is one contract at a time, initial stop size for shorts is $1,100. So when we back test and optimize every 3 months, we're going to take a look at this algo here. There's a number of aspects to the algo, and I can actually back test on every one of these. Now the nuts and bolts of it are, I'm back test to the settings of the adaptive moving average. I back test to how much to set the initial stop loss at for. And I back test for if the initial signal candle is especially long, and I have a way for it to decide if the initial signal candle is inordinately long, then how much of a retrace should it look for the next day before it gets in? So those are the basic nuts and bolts of it. But I also backtest for sometimes for the initial stop loss for longs as opposed to shorts, and sometimes those come in different. Oh, and so when we do the back test, it comes up with the results. Now, very quickly, I want to show you on the settings. I figured that it trades one futures contract at a time, and that there's a $6 commission round turn per contract, which is about right for most platforms, going to come pretty close. And also, I set the back test period for the last 3 years running up to the most recent end of the most recent quarter. So this back test ran from October 1 of 2018 through September 30 of 2021. There's all the inputs I was just telling you about. And so when you run the back test, it comes up with these totals, and you see it made $116,321. Now, you'll notice that that matches exactly what I put on the screen. Net profit, 116,276. So all these stats right here that I put there, that come directly right off of this back test. And on the quarterly sortable spreadsheet, all of these stats also come straight off of that back test. And there's something called an equity curve. And here is the equity curve over the last 3 years on the Dow Jones Industrial Average. So when you're designing an algo, you would like the optimum thing is to have a very smooth equity curve moving to the upside. So the equity curve represents the amount of profits that the algo has brought in over a period of time. So there's the beginning of 2019, there's the beginning of 2020, the beginning of 2021, so on and so forth. And that equity curve, I can tell you, ladies and gentlemen, is excellent. It generally moves very smoothly from the lower left to the upper right. And another thing I'll mention on the algo is that the settings that we ended up with here, 13, 2, and 30 on the adaptive moving average, a 10 period moving average of the Walter Bressert, back tested back best, as well as the size of the initial stop, both long and short, whether to use a trailing stop or not. And now this one, back test best, no trailing stop. Now you might say, well, how in the heck does it get away with not using a trailing stop? And the answer is because the Walter Bressert will tell you when there's a loss of momentum, and almost always a crossover of the Walter Bressert and its moving average is what tells you to get out of the trade long before it would move down to the trailing stop. Yes, Trade Navigator is capable of you could just turn on the signals. You could turn it on and it can auto trade. And answer, John, that is something that it can do. I personally don't like to do that because sometimes Trade Navigator crashes. And so in order to do that, I think you would have to set up Trade Navigator on a dedicated server, have it on all the time, and you still have to check on it every so often. There's several reasons why I don't think just turning something on is a good idea. And I'm going to give you one really good example right now, and that is, I'm going to close out these equity curves and things. This most recent signal on the Dow Jones Industrial Average was a buy signal but it was a long candle and it was looking for a X amount of retrace. As a matter of fact, it was looking for a 190 point Dow point retrace in order to get long after that long of a candle. And it didn't, and it needed it to do that the following day, or else it's not going to take the signal because it doesn't backtest well. It backtests much better after long, inordinately long candles. It backtests better if it waits for a bit of a pullback. That way you don't have to use as large of a stop. But as you can see, it never filled. There'd be some little triangles here and you'd show a position. But if you want to trade the Dow Jones Industrial Average, but you're a premium plan member, you would see that very same night on October 14 on the ES contract that there was also a buy signal came in there. And then the following day, now the retrace that it's expected based on backtesting, the size of retrace the next day on the ES contract is not nearly as large. It's only 3 S&P points, 12 ticks. And so it was able to fill and it got long. So if you're a premium plan member, you would see, oh, well, the S&P filled, but the Dow didn't, but I'd like to trade the Dow. I'm going to go ahead and go long. Why would I go long? Because that's one reason you could do it. Another reason you could do it is because on my main count, I'm generally bullish all the way to December 11 based on a combination of Elliott wave and Hurst. And so you could feel more confident in going ahead and getting long, even though it didn't fill on using the exact criterion of the algo. If premium plan members can trade these signals, I'm with no more than 15 minutes a day if they want. They just need an account and some way to trade. And so something like TD Ameritrade, their Thinkorswim platform, and they've got a really nice app on their phone that you can use. And you could check in the evening, early evenings. We generally get those out about 6 p.m. Central Time. Place your orders and forget about it, and just look every night to see if there's any additional information about whether to exit or whatever. You could literally use the premium plan and trade these signals. Looking at our nightly reports, no more than 10 or 15 minutes at a time in each evening. And you could have a full-time job and still do it. David Edwards asks how and when subscribers are notified. Well, we send out an email every night, and it's generally around 6 p.m. to let you know about the new signals that have come through. Now the futures market closes, maybe around 3:30, 4 o'clock. Now that time of day, usually there's very little movement. And so pretty safe to have that couple of hours of time where we could prepare the report. The other thing you need to know is that one of the important items that we show nightly is the sentiment conditions, and we don't know what the DSI, the ending DSI number, the daily sentiment index number is until probably about an hour after the close, around 5 o'clock. So we prepare the materials and get them to you just as soon as we can. We also, on many items, provide signals on ETFs. For instance, on the ES contract, we provide the signals on the futures contract, of course, but we also provide the signals on SSO, the 2 times bullish, 2 times leveraged bullish ETF of the S&P, and SDS, the 2 times bearish leveraged on the S&P ETF. if you prefer to trade ETFs. I will say, though, you get more bang for your account size trading the futures than you do trading ETFs. Now, if you have a very nice large account, you might prefer to trade the ETFs. It would you wouldn't make as much money over time. You would take about 5 times as much in your account in order to make as much money as what the futures provide to you. So you would have a choice there on how you what you felt comfortable with. And we provide the 2 times leveraged bull and bear ETFs on the S&P, the NASDAQ, and the Russell. So our nightly report includes those signals on those items as well. And those items can also provide the confirmation you might be looking for on whether you need to go ahead and take that trade, for instance, on the Dow Jones Industrial Average or not. Like we've got a buy signal on SSO on October 14. It's a couple days into the trade and it's in profit. You can see where the stop is. Now, there's no trail on this. That stop is still going to sit way down here. But at some point, the Walter Bressert and its moving average are going to cross over up here, and it'll give us one of these little red squares that says, get out of the trade. We have a loss of momentum. And it probably at this juncture, it's well enough up in profit that it's doubtful, unless there was some sort of major news event that caused a massive spike to the downside, it's very likely that this one is not going to get stopped out. We'll just get an exit signal based on what the Walter Bressert and its moving average do. That reminds me, there's some really important, one additional really important, or 2 additional important indicators on virtually all of these screenshots that you can look at and get some really good information out of every night. One is the money flow index versus traditional RSI. So the black line is RSI. The blue line is the money flow index. And and you'll notice that there's different colors of severity of overbought or oversold on this item. The last time we had a severe overbought situation where the RSI was in overbought territory, but the money flow, the volume wasn't there to support it, was in this area right here. And we also had a DSI of 90, a very high reading, and it was saying, hey, watch out. We're probably going to see a correction soon, and which there was. I mean, it was more of a sideways, but it was a correction. But look at what it did. It was giving you that kind of a warning sign right here, right ahead of a pullback. That was back in September of last year. And then also the opposite can occur. You can get some pretty radical buy signals. So it was getting extremely oversold here. And then once it exited oversold territory, and the money flow, the important thing here is the money flow was, at least at this juncture, was not moving to new lows below the RSI, and that created this dark green stripe. Then they both moved up out of oversold territory. We had a Walter Bressert, and that was one of the better signals we've had in recent years. That was just one day after the low in March of 2020. Same thing happened going into the high that led to that plunge down into March of 2020. We had some major warning signs happening up here. We even had a 92 reading on the DSI right here. And so there's additional indicators here that aren't necessarily part of the automated signal that also can give you some warnings that where, it's like, hey, you need to be smart right here. conditions on the oversold nature of the RSI and the money flow indicator are suggesting that we're at a tradable high or an important high or an important low. The other thing that is included on as many of these future contracts as possible is a filter that will filter out trades if the DSI, the daily sentiment index, if the retail traders are all over on one side of the boat. So let's go down and look at, excuse me, look at gold, silver. Let's take a peek at gold and silver here and look at what the algos look like on that. Now, something I need to remind you of is the algo signals, well, yeah, on silver and gold, not quite as successful as they have been on several of the stock market and currency items. Still, gold was able to take a $23,000 account and add about $80,000 to it over 3 years. I would call that successful. And silver took a 31,000 account and added almost $60,000 of additional profit over 3 years. Had based on, had the current settings been in place the entire time. So let's look at silver. It seems like silver recently, yeah. See, silver had some really, really low DSI numbers, 12, 12, 12, 10, 10, 9. This is the actual nightly, this is the algo. And anytime the DSI, and we backtest based on these for these thresholds, anytime the DSI is below 28 on silver, it refuses to take a new short trade because it just doesn't backtest well if you do, going back over the last 3 years. So anytime the DSI is below 28, you get a green zone down here. And you also get a hollow green box up here. And you can see there were several sell signals here that the algo just simply refused to take because the DSI was too low. Now, once it started getting buy signals, it was interested in taking those buy signals out of those extremely low periods. I think the same thing happened on gold. On gold, yeah, we had DSIs of 12, 10, and 10. Well, based on backtesting, anytime the DSI is below 16 on gold, on the same night that it gets a sell signal, it will refuse to take the sell signal. So it refused to take this one because it was in a green box. And we know we at that night we said sell signal skipped DSI too low. And then we put another arrow right here, DSI signal skipped, DSI was too low. And now you can see the adaptive moving average, it's been changing colors. And I think there's a decent chance we get a nice rally in gold pretty soon. But I think we'll get a little bit more of a pullback based on my Elliott wave count. But pretty soon this is going to turn green and start trending up. And at that point, I think we'll have a cleaner situation for going long. After major lows like this, sometimes gold is choppy at first, and you can see it's been changing the slope color of that adaptive moving average a couple of times recently. I think it's going to eventually work into an uptrend based on the Elliott wave count, though. Same thing with silver, and so let's see, silver. So on silver, I think we're setting up a series of bullish 1-2s off of this large 18-month cycle trough low, where the DSI got all the way down to 9 down here in late September. And I think that it needs to finish another wave 2. And then I think it's probably off to the races to the upside, just to get, and this is something that premium plan members can look at. They can look at the automated signals, they can look at the sentiment, and they can also look at my roadmap on when I combine Elliott wave and Hurst, and see if they feel comfortable taking each and every signal or waiting for a little bit more of a pullback, so on and so forth. One interesting development, I think, that has occurred very recently from an Elliott wave standpoint is a lot of the gold miners have been beaten down terribly lately. And we kind of have a unique way of handling the signals on GDX. I'll cover those very quickly. I know we've been going an hour, and I'm gonna shut up in a minute. I think I've covered just about everything I want to cover. Look for and I'll start taking questions. And I don't care if your question is about my Elliott wave count or what Hurst thinks, but can you show me what the Sentient Trader looks like with a composite line on a certain item or any of that? I'll hang out and answer questions for a little while. But like on, I got to wait for the mining ETFs to load up here. And but the really interesting development on mining ETFs, I have my most recent posts. I don't post at the blog very often, but I've had a couple of posts about really timely buy signals that my Elliott wave and Hurst system was giving on XLE. There was one buy signal back in October of last year, and another buy signal that happened fairly recently, and both of those recommendations to, seems like a good time to buy large cap oil. We're right at some major cycle lows, and there's been a lot of upside that occurred on both of those. And another blog post I put up not too long ago about the miners. I posted a blog post back here right after this low, and I said, according to Hurst, yeah, we're going to get a decent rally out of here, but this still isn't the bottom. We're probably going to get the bottom more like over in August. Well, as it turned out, it didn't bottom until late September. And so, but Hurst was saying, hey, there's an 18-month cycle trough due around in August still back over here. And all of that happened pretty much on cue. But now on GDX, you look at this upward movement that we've seen. First thing is, pretty good chance that this low here was an 18-month cycle trough low. That's using Hurst terminology. And if you're a subscriber, you'd get used to me talking about that, believe me. And you could ask questions and learn about Hurst and the way it works. But I integrate it into my counts. It gives me an overall roadmap that gives me a huge edge over other Elliotticians that only use Elliott wave. It isn't perfect, but I think many, many times it has proven to be the real difference maker on some of these calls that I've made. So here's the real interesting thing on GDX. 1, 2, 3, 4, 5. That's about as clear of a 5-wave impulse as you're ever going to see out of a major low. That indicates, at least based on Elliott wave theory, that we have a new trend direction in the miners, and it is up. And after a 5-wave structure, you usually get some sort of corrective or 3-wave pullback down approximately to the wave 4 of 1 lesser degree, but also potentially if the previous wave 5 was extended pretty long, which it was, it might only make it back to the wave, small degree wave 2 within the prior fifth wave. So I've got a target zone. And then Hurst also agrees that we might have a few more days of down on the miners, but very bullish. Really, most items are bullish into next year, in my opinion, and this is based on Hurst analysis. When we go to the GDX on the weekly chart, the next 18-month cycle, I think we're coming out of an 18-month cycle trough and moving up into an 18-month cycle peak due in the late in the, probably on average late in the first quarter next year. And Hurst thinks a lot of items are going to top next year. Question, can you lay out a step-by-step starting the information you send me, opening a trade? Which level of service is required? Well, the cheapest level of service, $25 a month, doesn't talk about any trades at all. But what you do get is you get a trend chart. So at least lets you know what the trend is. And so every night you get trend charts, including this one on GDX. And that is the trend turned up on October 6th. You're in a green buy zone box, and generally things are expected to go up as long as it's in an uptrend. Now, it doesn't attempt to predict when to take profit or when exactly to enter a trade. That's in the $25 a month. Now, premium plan members, when it comes to GDX, also get screenshots on Nugget and Dust. Nugget is a 2 times bullish leveraged ETF on the gold miners, and Dust is a 2 times leveraged bearish. And what this is essentially the same template that I use for my algos, but I use catch-all average settings that are not back-tested here on both the moving average of the Walter Bressert and on the adaptive moving average. And it doesn't, and the other thing it doesn't suggest is size of stop, but it does give you what could be considered buy and sell signals on 2 super popular ETFs in the mining. So we've been on a sell signal on Dust, and that's a buy signal on Nugget since October 6, October 7 timeframe. But now you see we have this Walter Bressert. So if this was an algo, it'd be saying we have a loss of momentum. You might consider getting out, even though it's still in a buy zone green box. Might be looking for a pullback. And then if you're a premium plan member, you could look in at my GDX roadmap and see, oh, yeah, Sid's looking for a bit of a pullback here before it moves higher. And you put all that information together and come up with a trading plan that I think will work great. Scott asks, are you able to show your most up-to-date Elliott wave count on gold as you did silver, lead? Well, the gold count on the very short term, Scott, is really, I would say, ambiguous. And I've talked about this in my webinars last week. And if I were just an Elliott wave guy, then I'd be worried about this price action in gold. But one thing to consider, Scott, is what I just showed you on the gold miners, which is a very clean, clear 5-wave up structure looking for a normal pullback. So that's some evidence that despite how jacked up this price action is on to the upside, that this low back, here's what I can tell you from an Elliott wave perspective. There was a capitulation in gold back on August 8th. Hurst is calling that an 18-month cycle trough. So the general idea should be to the upside. That low was followed by a clean, clear 5-wave up structure. 1, 2, 1, 2, 3, 4, 5 for 3, 4, and then 1, 2, 3, triangle for 4 or 5. So anyway, that's a nice clean 5-wave up, followed by what I think was a nice ABC zigzag to the downside, and the C wave was a ending contracting diagonal. And that was followed by a clean, clear 1, 2, 3, 4, 5 waves up. That really is the last time we saw anything that was really clean on gold. Everything since then has been rather messy. 3 waves down, 3 waves up, 3 waves down. Now this looked like a 5. So I'm thinking on my main count, this was a W, X, Y for wave 2. And this was a 5-wave up structure, 1, 2, 3, 4, 5 for another one. And then what that means is that this low right here at 1749.90 becomes green to invalidation, green to invalidation. So I just think that the 1, 2, 1, 2 process is in my preferred count is just super messy. This is something that throws Elliott wave only people into convulsions because they're always looking for really clean 5-wave structures for inside of wave 1s. And I got to tell you, they almost never happen. Clean, clear 5-wave structures for wave 1s almost never occur. Wave 1s are happening while there's a big dogfight going on between the bulls and the bears, and many times it's very messy, and it causes quite a what's the word, debate on whether whether a new uptrend is occurring or whether we're getting just a bear flag. See what I'm saying? Been asked for a US dollar. I asked for wheat. John Fickle, I don't have a wheat, but I do have a soybeans up to date. Yeah. So anyway, I'm looking for a bit more down, a couple, 3 more days of down on the miners, which makes me wonder how this count is going to develop. And maybe it's a 1, and all of this was like an A of an expanded flat, B of an expanded flat, and then 1, 2, 3, 4, 5 down. I'll bet you that's what Goodburn is expecting, is maybe a 5-wave, 1, 2, 3, 4, 5-wave down here. Yes. I think Goodburn's a good wave counter. And so the only thing wrong with that, and it's not terribly horrifically wrong, is that this rise here was much larger than 1.382 times this decline. Usually a B wave, it would have been much better if this would have been the end of the B wave and it would have gone 1, 2, 3, 4, 5 on down there. But then we got this really big rise that makes for an especially large B wave. I have noticed that Goodburn doesn't mind gigantic B waves. He'll go ahead and call them B wave, and that may be what it is. So then US dollar index. Has been requested. All I know is, Scott, when it comes to the miners, I was in there long and made some nice profits. Got out, I think, Thursday of last week, maybe Wednesday of last week. It was a big up day. got out toward the top of that day, and the miners have been kind of messing around and are still have gone a little bit higher, but it looks like correctively higher. And I'm still expecting a few more days of down before I want to buy some more there and get back in. And there's as far as the US dollar index goes, I can tell you this. From a longer term Hurst standpoint, it's bearish, the dollar. Hurst is bearish, the dollar. It's generally bearish out of an 18-month cycle peak all the way down next through August of 2022. Have not covered Bitcoin, would be happy to do so for you in a minute. And then, so my count on the dollar is that we, from this important high back in March of 2020, 1, 2, 3, 4, 5 waves down, very clear, very clear, even had what I call a 3-5 divergence on the weekly chart on the RSI. And here's the really important thing. The really important thing about the US dollar index, in my opinion, from an Elliott wave standpoint, and that is that this initial rise off of that low in early January 6th of this year, was corrective. It was clearly not a 5. It was a 3-wave structure. So I've got that 3 waves up as a wave A, and then a wave B that retraced a little more than 90% of wave A, and that's what you would expect from wave B of a flat. And you also need wave B of the flat to be an A, B, C. And this looks like a pretty decent finished 5-wave structure. 1, 2, 1, 2, 3, 4, 3, triangle for 4, and then 1, 2, 3, 4, 5. Is it possible that it sneaks up and makes one more slight new high? Yes, because it hasn't moved quite deep enough to completely invalidate that expectation. You see, if this is a 1 and a 2, 3, what if this is all the way 4 here and you have a 5th wave up now? It's possible, but it came very, very close to invalidating that today. That's not my main count. My main count is that an 18-month cycle peak has been overdue. It really was due more like July, August, and Hurst continues to, it's a very large cycle trough. So the window for the larger the cycle trough, the larger the window is for the peak in this case. But here's another important thing about the US dollar index, in my opinion, is that this move down right here, 1, 2, oh, see, there's that triangle, and there's that 5th wave up, 1, 2, 3, and I think this was a triangle and then a fairly short thrust. And what I think what the dollar was trying to do was get to a normal retrace level back to the wave 4, 1 lesser degree, and it's been kind of desperately trying to get there. And it came pretty close. It didn't hit it quite yet. But this looks like a really clean 5. 1, 2, 3, 4, 5. And this upward movement here, that was corrective. Now this downward movement right here so far, it looks like a 3. And so I think it's highly possible, and that you know how I just told you I thought the miners were going to move down for a few more days, maybe through the end of the week, maybe even through Monday. That it's possible that this was 3 waves up from A, and this was a deep, a little deeper than normal B wave, and put question marks on those. And we'll get a C wave up, and we that the US dollar index needs to finish an expanded flat, and if that's the case, it would probably move up next and finish off a 0.618 retrace of this initial 5 waves down. So that would be up to 94.25, something like that. So we're kind of at a critical juncture on the dollar. You'll notice that my main count is that it continues lower, and the reason for that is that there was a kind of a window for a 40-week cycle trough down in here that's kind of only lasts through the end of this week. But that doesn't mean that this can't be pushed over. And I'm kind of thinking that there's a 50-50 chance here now that the US dollar pops up here to 94.25 before it really gets going, on lower. So there's the US dollar wave count. Bitcoin has been rallying lately, and to be honest, based on Hurst, wasn't really expecting this big of a rally recently, but Bitcoin is a very interesting case. And I'm going to bring up the live chart, and I'm also going to go to my website here, and I'm going to show you that something I put in the screenshot. No, when there it was under the daily trend reports last night, the 18th, and that is under crypto charts. I put this Bitcoin current Hurst cycle analysis. And so this, I'm going to blow this up some. So I'm not sure how to do that. Right here. So this is the Hurst roadmap for Bitcoin. This is the high that occurred back in April. This looks like it could have been a 5-wave down structure, but now we're come awfully darn close to making new high above this high. If this was a 5-wave down, this really shouldn't make a new high here. And you could see that Hurst, this orange line is the composite line, is bearish from about exactly now down into all the way into April, May of next year. Then it's looking for some upside after that, all the way into, it looks like around maybe January of 2023, and then a bigger down leg. But the most important thing that this is suggesting is it's expecting a peak here in Bitcoin and moving on down. So if that's what's going to happen, and by the way, Hurst analysis doesn't care if it makes a new high right here now or not. It doesn't care about invalidations. It just figures that there's going to be downward movement from now until down into April 2022. And so a lot of Bitcoin people probably that are bullish are probably going, oh, come on, man, make a new high, because then the Elliott wave people will have to turn bullish. It'll invalidate their bearish count. And what I'm saying to you is, I don't care if it invalidates or not. I'm still going to be bearish from about now, even if it makes a new high, all the way down into April, because that's what Hurst thinks, and I generally stick to the Hurst roadmap. Here's another really interesting aspect of the upper movement in Bitcoin is, what if the wave 3 top ended here, and this is 3 waves down, and then a B wave, and this was the end of a fourth wave, even though it looks like a 5-wave down structure. What if that was the end of a 4th wave, and this is the 5th wave up? Well, if it stopped going up now, it would be a truncation. That would be bearish. But you would just simply need a 5-wave up structure. And that appears to be a possibility, that it's putting in a 5-wave up structure. Well, what's a good target for the end of a 5th wave in Elliott wave? Well, the very best one is where the 5th wave on a Similog chart, this is important, this is Similog, Many of you don't have platforms that allow for semi-log charts with Fibonacci drawing tools that draw in using Fibonacci, using semi-log, excuse me, semi-log math. So a typical fifth wave really would have ended about here, and yet it's stretched a bit further. But so my alternate is that this is a 5-wave up structure, 1, 2, 3, 4, 5, and we're getting a slightly longer than normal fifth wave. And even if it invalidates, I think that will barely make a new all-time high for Bitcoin, and then it'll immediately reverse and head down into April. So I'm bearish. I don't think there's any reason to stay with Bitcoin looking for more upside when Hurst has been really looking for this top up here. And also, even in a bullish case, if it's a 5-wave up structure, it's a little past its best target. So I don't think there's a lot of upside for Bitcoin here. What else? What else? Any other questions? Anything else I can cover for folks? Well, for those that are stopping in to check in for the first time, welcome. It is really difficult to find people that are interested in my work because I just don't market very often. So this is a rare time where I'm doing a little bit of marketing, and I hope you will consider subscribing to one of the levels of the plans. Frankly, I wouldn't consider the $25 plan. I would hope you would try something better than that. As a matter of fact, if you've never subscribed before and you'd like to subscribe to maybe one of the higher price plans, let me know. Send me an email. My email is sid@elliottwaveplus.com. And send me an email. And if you're a first-time subscriber, I'll refund half of your first month after you subscribe. And would be happy to do that if you're a first-timer. I've been asked about the long-term view and the Dow Jones Industrial Average. I'll show that very quickly and then finish up. So let me wait for it to come up here. So on the quarterly charts, the best way to show it. Most Elliotticians are labeling the 1932 low as a super cycle wave 4 low. Most Elliotticians use data going back into Europe, back into the 1700s, and paste that on to the beginning of the Dow Jones Industrial Average data, which started, shortly before the year 1900. And when one does that, then one can look at the internal wave structures after the 1932 low and set up some Fibonacci targets. First thing you have to do is you must use semi-log, and your drawing tools need to draw in using semi-log math. You can't find this in most platforms. Trade Navigator's got it. Most don't have it. And so I think from that 1932 low, we have a clear 1, 2, and 3 through the year 1966. So that'd be the end of a cycle, wave 3, and then a wave 4. Well, obviously, since then we've been in a really, really extended fifth wave, way more extended than typical fifth wave. That doesn't mean that fifth waves can't extend this far. It usually happens in commodities, but in this case, it looks like it's happened in the stock market. So what I do from a Fibonacci standpoint is because I have some other Fibonacci's on shorter term counts, that are all clustered around 42,000, let's say. The best Fibonacci, extended wave 5 Fibonacci target for the fifth wave would be where wave 5 was equal to the start of the pattern through the bottom of wave 4 times 1.618. So I measure the distance from this low to this low, take that times 1.618 and add that to the bottom of that low on a similar chart, and that brings us to 41,020. And then where do the other targets come from? Well, from the 1974 low, a 1 and a 2 and a very, very extended wave 3. As a matter of fact, that wave 3 was almost exactly 4.236 Fibonacci expansion of wave 1. So it's extended, but it stopped at a Fibonacci target for that can be used for an extended wave 3. And then an expanded flat for wave 4. And by the way, wave 4 retraced the entirety of Burgundy wave 3 by almost exactly 0.236, which would be probably about right after that long of a third wave. So now at this point, we've already had an extended wave. We're not looking for an extended wave 5 in Burgundy, and that'd be a primary degree, according to Elliott waves chart system, the Burgundy color. So wave 5 would be the most normal wave 5 up from the 1974 low at 41,981. That is where Burgundy wave 5 would be 0.618 times the net traveled of 1 through 3. So I've got a couple targets now of 41,020, that's cycle degree, then a Burgundy degree, 41,981. Now I can look at the upward movement from the 2009 low and look for another Fibonacci target, this time black or intermediate degree. And 1, 2, 1, 2, 3, 4, 3, 4, 5. So all I need is the net traveled of the start of the pattern through wave 3, and then look from the wave 4 low, that would be the March of 2020 low, look for a wave 5 that is equal to 0.618 times the net traveled of black 1 through 3. And that target is a little higher. It's at 43,652. By the way, I think it's very likely that we see the upper range of this target zone, because when you get into the Fibonacci's of the nearer term waves, they set new Fibonacci's, and a lot of times because of all the money printing and whatever, they're a little higher. And that, so 43,652 I think is the very best target for a long-term top on the Dow Jones Industrial Average. The big question at this point is, how is it going to get there from the March of 2020 low? Now, for a while, I thought we get an ABC for wave 1 of a diagonal, and then we get a deeper wave 2 of a diagonal, and it would take maybe a couple more years than what I'm showing right here for it to finally finish off an ending contracting diagonal up into that target zone. But the market just hasn't been willing to give enough back at this stage to consider that that diagonal idea. I floated that for a while, but I've always had this target zone up here. This is the driving force of my wave counts. So now I'm just looking for a 5-wave non-overlapping impulse up into the upper part of that range. Now, another thing I could do at this point is I could look for a Fibonacci target for the end of blue wave 5. The only problem with that is I don't think we have a finished blue wave 3 yet. But let's say we did. Let's say we did have. So I'm going to take this out of Simulog. The reason I'm going to do that is when I use this next tool, the Fibonacci extension target, in a Simulog chart, sometimes it crashes the platform. But let's say that this, we're going to draw it up, Fibonacci expansion tool from there. No, not expansion. Not support resistance. Yeah, extension. Boom. Let's say that was the top of wave 3 and that was the end of wave 4. Now on a linear chart, that sets a target way up at 44,377. Let's see what it does once we change it to similar. It's still, it sets it even higher at 50,887. And that's if the 3 and 4 ended here. I'm kind of doubting that it did. I think we might move higher for wave 3 and get a little deeper wave 4. And we really can't draw that Fibonacci target until we see a little bit more movement. So I'm not willing to put a target for the under blue 5 on yet. Bob says Dave Hickson at Cineon Trader has the gold 18-month low projected in 3 months for December. That's a really good question. And in my opinion, Hurst has a lousy history with gold. Gold, for instance, Hurst was still expecting a large cycle trough all the way into March of 2016, whereas gold actually bottomed right at the beginning of the year in 2016, and it missed it by about 3 months. I found that to be a fairly significant miss. So I try to use a combination of Hurst on using Hurst on the US dollar index and gold and silver and platinum and a lot of things. So let me show you, for instance, what I think is going on platinum. So I count a lot of things. I do Hurst on a lot of things. And then I try to put together a roadmap that makes sense based on that. So I think gold, to be honest, Bob, I think there should be a repin in gold that would bring that 18-month cycle that would make that August low, the 18-month cycle. But let me go to platinum. So on platinum, which admittedly does not move hand in hand with gold, but I do find it to be worth looking at in comparison with the gold and silver roadmaps. And on platinum, using a Hurst analysis starting in January of 1994, Hurst nominal model, peaks and troughs, and no repin. It is calling this most recent low here in platinum an 18-month cycle trough. That was on September 21. This was a trough that I basically called in real time for my subscribers, because I saw this ending diagonal that included a very small throwover right here. So I mean, and then ever since then, it's been quite bullish. The fact that we're getting an 18-month cycle trough here in late September, I think indicates that on other items, other metals, for instance, copper, I think there's a very good chance that this low right here in copper, that was on August 19th, was an 18-month cycle trough, and that it's generally going to move higher. Then you move to precious metals. And I think Hurst has been waffling about on where that 18-month cycle trough ought to be on gold. But look back here. And with one repin, it considers that low back in August an 18-month cycle trough. And that repin is right here. And what David is looking at is that no repins analysis is putting the 40-week cycle trough here. Okay, so this is a little complicated, and I know some of you may not want to stay up late on this, but I'm here, and I've got everything open and ready to go. I'm going to bring up Synium Trader. I'm going to go ahead and show this idea to Bob, and you're all welcome to watch and see how I work with Synium Trader software, which is how I use Hurst, and Hurst is a major component of how I develop wave counts. One thing before I do start that gold analysis is that I think all of the downward movement from the early August 2020 high in gold is clearly corrective. It's not impulsive. It's not at all impulsive. It started with a three-wave structure, and everything was built in threes for a while. And I've been calling it, because I was looking for an 18-month cycle trough here and an 18-month cycle peak in August in the US dollar index, I've been calling it a triple zigzag, that it would eventually be a triple zigzag, since before even this low occurred here, and I haven't changed that count. ABC for W, ABC for X, A, B, C for Y, ABC for another X wave, and then a 5-wave down structure here, A, 3 waves up, B, a capitulation move to the downside. I think that low is going to hold. The DSI got it down to an 8. And then importantly, out of that low, I already showed this earlier in the webinar, there was a clean 5-wave up structure. A lot of evidence there using strictly Elliott wave that suggesting that this was a large cycle trough that's going to hold. I don't need Hurst to tell me that. Also, this pullback was in 3 waves, and it pulled back to the 707 Fibonacci. So everything's working pretty well on the wave count, except for this gobbledygook we're seeing here just in the last little bit on short term. But I'm going to bring over Synium Trader, and I use gold starting December 1995, 1 repin. And the first thing I'm going to do is I'm going to bring up gold starting December 1995. First nominal model, peaks and troughs. I use peaks and troughs on commodities, and I'm going to go no repins. Okay. This is probably what David's looking at. David Hickson, who I love, by the way. I think David's great. But that doesn't mean I'm always going to agree with everything he says. And you can see it's putting the 40-week cycle trough right there in early March instead of back here. All right, let's look forward in time. Now, if I believe you know Hurst, Bob, but this would be a typical 4.5-year projected 4.5-year cycle due to end in the mid 2025. And inside of that should be only 3 of these yellow, 3 of these 18-month cycles. And you notice that it's actually, it has morphed recently, and it's calling this the 18-month. That's interesting. It's for a while it was saying the 18-month which would be on ahead of us. So I'm waiting for the peaks analysis. But if I were to split this into 3s, it would make a lot more sense for the 18-month cycle trough to be here than it would here. A lot more sense. And then, you know, this low right here, the March of 2020 low, very large cycle trough for a 9-year. That's the same degree cycle trough as on the S&P 9-year cycle trough. So the question is, where's this doggone 18-month cycle trough? And so if David's using this roadmap, he's looking for it to move, gold to move down now into early December, around December 5, maybe December 3, then move up into February of 2022. So this is probably David's roadmap. And what I'm saying is this 18-month cycle trough should not have occurred here. So let me do a repin. I'm going to repin the 40-week to right there. This is a repin I've been using for months. And I'm putting the first 40-week cycle trough off after that March 2020 low right here. So hopefully you would see what I'm saying, that if that's an 18-month cycle, that was very short, too short in my opinion. And the amazing thing is, if Hurst just changed its mind for a while, it was expecting it about here in November, December. But very recently it changed its mind, and I don't think it was right either time. I think that the proper place for that 18-month cycle trough is right here. And with this one repin I did from the 40-week, just bumping over here, that should put the 18-month cycle trough here. And we just got to wait for the analysis to run through to see if that's what it does. And I think that's what it does. Puts the 18-month cycle trough here. Another thing I'm kind of questioning on Hurst is, was this high in August of 2020 really a super large cycle peak? And the reason I've questioned that, and I haven't done any repinning to try to figure out if that's right or not, but it's calling that a 9-year cycle peak. And I've got to wonder if that's really correct. And that's why the gold roadmap is rather bearish. And the reason I think that may not be correct is because clearly all of the downward movement in gold since that peak has been corrective. It's not impulsive at all. There's no clear third wave or anything like that anywhere. So it's corrective. And if it's corrective, how do you count it? And in Elliott wave, this is a very complex count, but it can, when you get to a W, X, Y, X, and Z, you are out of alphabet. That's as extended as a correction can get if your labeling is correct. So yeah, when I do that repin, then it does call that low in August an 18-month cycle trough. And then this is what it's projecting next. I'm going to get rid of these. Oh, one thing before I get rid of the phasing, notice that at least that extends the 3 18-month cycles over closer to where a typical 4.5-year cycle trough would be. At least it gets it a little closer. It's still a little, it should, the 4.5-year cycle and that third 18-month cycle should end about the same spot, but it doesn't appear that they are. But anyway, and so what this is calling for is, I would say, generally upward movement in gold through February 11, according to the composite line. And it's bullish here until late October, then a pullback through about November 23rd. And I think that roadmap has changed a little bit recently, but you can see the ultimate end of the move, of the next upward move. I think I am using that as in February of 2022. But according to Hurst, according to Elliott wave, I think we have a finished triple zigzag, and we got a 1 and a 2 set up, and that it's bullish. Notice for subscribers, I do include the information that a no repins analysis is expecting a low in early December, just like I just showed you with no repins, and then a move up into February. Same deal. But it's the corrective nature of the downward movement that leads me to want to become more bullish more quickly. So hopefully that explains the difference. You can see that repin right there, and that puts the 18-month there. Any other questions from anybody? Thank you, Bob. Thanks for joining in the room. How about anybody else? I know this is running quite long, but I don't mind it. If I'll, but if no one else is asking for anything, then I'd be. I don't want to keep you too long. Jack says time for crude. Very quickly. Crude oil's been amazing to the upside, hasn't it? I'll just show crude oil very quickly. Longer term, I think crude oil rallies all the way into late 2022. All the way until late 22. But I think it's moving up in a corrective fashion. A, B, C for a W, then a very quick X wave, and now we're in another A, B, C. We're going to keep going up into late 2022. Here's the weekly chart, a little closer look. There's that A, B, C for wave W, and then very quick X wave. Why would I expect the X wave to be over here so briefly? Because Hurst thinks that's an 18-month cycle trough. And that came in late August. Okay. Then an A, B, C, unfinished up into actually November of 2022. I need to change this over here to November 2022. Now, see, Hurst adjusts as it moves along to the price action that it sees, and I'm glad that it does. Because but I will say it does have a tendency to keep me on track. I was a lot more bearish on crude oil back over here, but it became apparent that it had already been 18 months since that April of 2020 low in crude oil, and an 18-month cycle trough was likely due. And we got that little correction, and pretty quickly I shifted. Once this looked like it was probably the 18-month, it's moved into a more bullish posture. On the shorter term, looking at the composite line is looking like it wants to suggest a bit of a pullback here for the next 2 or 3 weeks, and then just more up. So that's a real quick view of crude oil in a very short term. It could be that we're, we got a 5-wave up structure for 1 and a 2 here, and still very bullish. 1, 2, 3, 4, 5 for another wave 1, and then an A, B, C expanded flat. Next, maybe coming all the way back to the wave 4 of 1 lesser degree. That's down to about 75 on oil by the time we get it about a week into November. So I am looking for a bit of a pullback here in crude. What happens after $200 oil? Well, Greg, I know you make your living off the oil, but it might be time to retire. No, it's I would say it's pretty bearish after that for another leg down, fairly substantial leg down, a multi-year bear market, frankly, crude oil. Maybe I've got it, yeah, down. At some point, I guess, we'll be using crude oil less. It's not a renewable energy, and I don't know when that's going to be. And I don't like to talk about fundamentals because often they don't mean anything. That's why I stick to the technicals. Oh, you already retired, huh, Greg? Well, congratulations, sir. And you have beat me on that one. I have not retired. I'm jealous. Anything else? Anything else anybody wants to look at? Gone. Let's wrap this thing up. Hey, thanks a lot for joining me. It's kind of a little different type of session than I normally have, where I can spend a lot more time on what you guys want to see. And maybe I shouldn't do it quarterly. Maybe try to do it more often. I did make an offer. If you're first time subscriber, I'll give you your first month free if you subscribe to, let's say the pro plan or the premium plan. I'll immediately refund half if it's your first month. You can always cancel after your first month if you just don't like what I'm doing here. Anyway, so please give it a shot. Um, what else? Oh, expect a blog post and an email tomorrow when we post this spreadsheet that you can download and sort around and look for which algos might be the best ones and the results on the algos for premium plan subscribers. Have a great rest of your evening and rest of the trading week. For those of you that are current subscribers, expect those midweek screenshots from me tomorrow night and the nightly premium plan and trend plan screenshots every night through the rest of the week. See you soon. Bye-bye.